Alright, we are going to begin the Mercury Bicycles presentation here. My name is Charles Whatley, and my colleagues are Marni Retynski, Dale Rageth, Eric Hartley, and John Ferrer. And then, of course, some of our products on display here. So the couple key metrics on this that I want to talk about is our product line. We've released many more bicycles than most of our competitors, and decidedly more in terms of value than the next number numerically. So Ride With Us has one less than we do, but they have a much smaller market share that we're going to talk about here in a little bit. And then the other one we want to look at here is our productivity. So we're at about 90% total productivity in the manufacturing side, and very close to that, maybe I think it's a percentage point less, but there's not a number at the top there, in terms of sales force productivity. So every bike we're able to sell, or every bike we're able to make rather, we're able to sell. And that's something that our competitors for the most part just aren't able to do nearly as well. And so then going over to the financials of how those sales managed to impact us, we were able to turn a net profit in Q3, which none of our competitors were able to do, as far as we know. But the industry average was negative 91,000, whereas we managed to bring in some net income around 172,000, and that is a difference of $264,000. So we also project that our future revenues are going to increase 71% for Q4, 66% of Q5, and 41% of Q6, and that's quarter-over-quarter growth. This is mainly based off of market saturation and dominance, being able to reach every customer as things go on. We also estimate that our net income is going to rise about 830% between now and then in Q6. So over the next 3 quarters, it's going to increase 800%. And then it's going to reduce our gross revenue by around 10%. And I'm going to pass it over to Eric now with our strategy.
Hello, everyone. I'd like to thank you for coming. I know you're very busy, so we'll make this brief. My name is Eric Hartley. I'm the president of Mercury Bicycles, and we'll jump straight into the SWOT analysis of our company. We're a strong online presence company. It's one of our best strengths. We're a pioneer in this space, and we will continue to do so. We're a market share leader, a high production capacity and utilization company, and we have excellent asset management. We like to say here at Mercury that we are a family company. Some of our weaknesses are we are an aggressive growth company, which comes with a lot of spending. We also like to think of this as one of our best traits, that we are aggressive and we were able to overcome the market from 5th place to 1st. We also have a marketing problem here in Amsterdam. We don't get out in the mountains very often, and so we haven't been able to develop ads or a successful bike for the market of mountain biking. Some of the opportunities that we have in front of us are new markets. We enter new markets first quite often, and new technologies. We're investing into a lot of R&D and a lot of new carbon fiber technologies that will make us one of the best offerings on this in the market. Some of the threats that we face are obviously our closest competitor, Berg Bicycles, and over-leveraging. We could overshoot our demand, and that is not something that we want to do. So we are, treating that as a very large threat, and we will adjust accordingly. Some of the things that we do well and poorly. What we do well, we're a strong leveraging company, and we have wonderful asset management, full utilization. In fact, we had a little bit of stockouts, which we have accounted for and will be taking care of. And that brings me to what we do poorly. Mountain bikes, of course. We had a few stockouts, and we could be marketing much, much more effectively. I'd like to move on to the next slide, advanced competitive threats, and draw your attention to the images and charts in the lower left-hand corner. As you can see, we are the market shareholder. We have 35% compared to Berg at 28%, and we have the majority of the speed market, which is a premium segment, and we own 45% of that market. And we actually trail Berg in mountain and recreation. However, we hope to remedy that very soon. I'd like to draw your attention over to the Advanced Balance Scorecard, where you see a lot of green. That's what we like to see. Obviously, what I said before, marketing effectiveness, investment in future, and wealth are all low. As I addressed marketing effectiveness and investment in future, we are slowing down our aggressive leveraging strategy, but we will adjust as the market changes, as it does all the time. Wealth, as you'd expect from a growth company, we obviously don't have as much wealth as some of the other companies. Yeah, a lot of green: financial performance, market performance, human resource management, asset management, manufacturing productivity. And as I said before, we are a family company here at Mercury, and we hope that with today, after seeing this presentation, you will join us and our family by becoming investors in the Mercury brand. Thank you, and I'm going to go ahead and pass you off to the next speaker today. Have a great day.
At Mercury Bicycles, we are leading the pack. We started as the underdog, but have excelled past the rest. Our market growth is currently double our closest competitor, Berg Bicycles, and we plan to continue that growth. Our market share is more than a third of the overall market, and our performance has almost doubled since last quarter, where all of our competitors have fallen. We currently hold the highest demand total. We are number 1 in speed bikes and number 2 in recreational and mountain bikes. However, we do plan to soar above the rest by rolling out new designs in the future to get the lead in all categories. More than 40% of our sales are through our web center. So we are researching new ads to gain an advantage over our competition. We have the widest range of bicycles, from low budget to high budget, as well as speed, mountain, and recreational bikes. We have the happiest employees of all of our competitors. We pay them the highest salary, the most amount of vacation time, and the highest pension. And they know that we generally care for their well-being. We do have similar staffing levels as our competitors, but have plans to increase that in the future as we roll out our new bicycles. We believe that our benefits package keep our knowledgeable employees from leaving us. We currently have the highest amount of people in our web sales center, almost double the next closest competitor. And we are leaving the competition in the dust. As you can see from the graphs, we have more than doubled much of our financial performance, as well as asset management. We went from being the underdog to being the leading competitor, and we plan to keep that lead.
At Mercury, we are committed to providing the perfect bike to our customers. Whether it is a recreational bike for everyday riding, a mountain bike for riding the trails, or a racing bike for the windy roads, we have a bicycle for you. In order to provide that perfect bike to our customers, we are determined to stay ahead of the industry by providing the best sales and service experience possible. We are dedicated to designing affordable, industry-leading bicycles that meet the needs and desires of our customers. It is our goal to be the first and only choice for our customers. We are determined to be the best, and our numbers prove it. In Q1 and Q2, we broke ground, opened our stores, and tested the market. In Q3, we were the only company to reach $2 million in sales and earn a profit. Now in Q4, we are focused on research and development. Currently, we have an estimated $900,000 operating loss. This is primarily due to having a $1.7 million research and development budget. Without the research and development, we are expected to have an $800,000 net profit. However, our future sales would be hurt drastically. Our current projection for earnings per share for Q5 and Q6 are $20 and $23 respectively. Without this research and development, those numbers drop to $12 and $20. Based on our projections, we feel the research and development expenditures are well worth it for the future of our brand.
Based on our financials, the EPS for our previous quarter is 16.7 when adjusting R&D, or 20 when looking at forward earnings for the next quarter. This EPS is also expected to grow at least 20% in the next quarter and onwards. Our PE ratio is 12, and although it is higher than the average PE ratio of 10, we think it's in a good place given that our company has performed better than all of our competitors so far. Given our great leadership and management skills, we expect to hold this lead, and we believe we can attain this especially with the additional help from your investments. Given the EPS of 16.7 and the PE ratio of 12, the estimated share value for the last quarter is $200.50, which means that the previous VC shareholders are currently looking at a little over 100% return. Given our historically great performance and our determination to continue dominating the market, we are looking to leverage our business by expanding our business globally, increasing our advertising and sales, spending on R&D, and creating the best 3D printed bikes that the world has ever seen. All of this would be possible with your help. That said, we are looking to receive all of 25,000 shares at $100 each. This totals up to $2.5 million in investment. We think that this is a fair offer given our good financials and our growth outlook. With this investment, we are confident to prove to our investors that our company is something of legend. And that concludes our presentation, and hopefully you consider our offer.